I mean, it's already happening. It's a race to power right now. I think one of the best investments you can do is buying the picks and the axes and the shovels around the AI infrastructure, right? So NVIDIA is the #1 chip provider in the world. It's the largest $5 trillion company right now. So that ship is kind of sailed. Maybe it goes to 20, 30, 40 trillion. It could with infinite money printing and where AI is going, humanoid robots, robo-taxis, right? This is all happening. You need to invest in this infrastructure and in the space. How do you get available infrastructure investment? You invest in the data centers, right? And so there's companies like Iron, Cypher, Nibis. They're all getting deals with hyperscalers like Google, AWS, Microsoft, right? And they're just dishing out billions of dollars because they don't have the power contracts that these Bitcoin miners have. They can get it in 2028, 2029. That's when it becomes available. But right now, there's nothing available. So they're going to pay for every gigawatt and megawatt of available power that's already contracted and ready to power. They will all be purchased in the next year, year and a half. So that's why these stocks are going up 500 to 800% in a 2-month period right now.
All right, guys, welcome to another episode of The Report. Today, I got a special guest. I got someone who specializes in helping folks, get tax advantages up to 100% bonus appreciation by investing into Bitcoin mining. We're going to talk crypto. We're going to talk Bitcoins. We're going to talk all about these assets. I got my man, Colin Yurcisin. Colin, welcome to the show, brother.
Let's go. Let's go. I appreciate you having me on, Rich.
Dude, appreciate you coming on. My man, Jack McCall introduced us.
Yes, sir.
And whenever I get an intro from Jack, I'm like, bro, we got to connect. Let's do it, man.
Let's
And
go.
now you're here, man.
Jack's a good friend. He's awesome.
Yep. Straight from Miami. You live in Tulum as well.
Yep.
But without further ado, man, so much to cover here, so much to jump into. And I'm actually really interested because I'm going to be learning with the audience today because I don't know a whole lot about this stuff, man. So first things first, dude, what is Bitcoin mining?
Yeah. So first, you got to understand Bitcoin, right? Bitcoin is a hard money, a hard asset that has a supply of 21 million, right? When you look at the US dollar, it's printed into infinity, right? If I ask you, what's the total supply of the US dollar?
They printed 80% of the money supply since 2020.
Correct, exactly.
And that's not going to stop. They're going to continue printing money.
We're in $34 trillion of debt, right? And that number increases every single day. So it's very important that we come to a money like Bitcoin that has a hard supply that cannot be manipulated. You cannot control it. It's peer-to-peer. It operates outside of the financial system and it's on a fixed schedule. So it's actually deflationary by nature and the dollar's inflationary by nature. So what would you rather hold your money in? Something that is going to make everything cheaper over time or everything more expensive over time? And all of us hold our money in dollars. Why do we do that when we could actually just swap it into Bitcoin? And if you look at everything priced in Bitcoin, it gets cheaper over time. If you go on, have you ever used TradingView before?
No.
Okay, so it's a website where you can measure assets, right? You can look at the S&P 500, the NASDAQ, Tesla, all your favorite stocks, and they denominate it in dollars, right? So the chart looks like it's just going up. But when you switch the denominator to Bitcoin and you measure everything priced in Bitcoin, it all trends down over time, which means what's happening? Everything is losing value comparative to the value of Bitcoin. Right. So it's the best performing asset class of the past 15 years. It goes up 50% annualized year over year, which is insane. That's never been done before by any asset class.
And when you say 50% annualized year over year, how long of a time horizon are you going back?
15 years.
Okay.
Yep. Since 2008 when it was launched. Yes.
Insane.
So it's the best performing asset class. That's a fact. And really all you had to do is just dollar cost average into it. Have you ever heard of dollar cost averaging?
Yes.
Yeah. It's spending more time in the market rather than trying to time the market. And that's essentially what I started doing in March of 2020. Bitcoin crashed to 5K during the COVID pandemic. And I took whatever money I had, it was about 25K at the time, and I bought 5 Bitcoin. And that was the start of my journey. And it was one of the best decisions that I've ever made in my life. And so I urge anyone that's, first hearing about Bitcoin, just go learn about it, read the book. The Bitcoin Standard is an incredible book that talks about the current money system we live in and what Bitcoin is and why we need it. And that's what I would implore you to do. Now, Bitcoin mining is basically how Bitcoin is stabilized and how it's actually built and created. So Bitcoin miners validate the blockchain. Have you heard of the blockchain?
Yes, but what is it? What is the blockchain?
So Bitcoin is the original blockchain. It's basically where all the transactions are stored. Okay. So if I sent you 1 Bitcoin right now, we would be able to see that for the rest of eternity, right? It's just on the blockchain. It is broadcasted for everyone to check. Now, in order to determine if I actually have 1 Bitcoin to send you to your wallet, we have to have miners verify that that transaction is actually correct. So the Bitcoin miners are these computers, big computers like this big. They weigh about 35 to 40 pounds. They have fans in them. You plug them in and they run one software 24/7 that basically validates the transactions on the blockchain. It's called the SHA-256 hash function.
Bro, this sounds
Very
like
crazy
like
name.
an archaic thing, though.
Okay, so this is where,
With AI and all the technology we have today, why is it this big old clunky TV looking thing?
So, it's the reason why is because it's designed to run one program better than any other computer, right? You used to be able to mine Bitcoin on a laptop, right? You could literally mine it on a PC. But now because of how large Bitcoin has grown, it needs to be as fast and efficient as possible. So they just keep building it bigger and better every single year that has faster chips, better hashing boards. And it's just essentially like the iPhone, right? Every year, the new one comes out and it gets to a point where they don't really make them much better anymore, right? I don't know if you got the new iPhone. It kind of peaked out. Moore's Law kind of stalls out
It's
after
the
a
law
while.
of diminishing returns.
Exactly. So Bitcoin mining is kind of at that point now. When I first got into it, the miners kept improving rapidly, like less than every year. Every 6 months, it was like, holy crap, we got to buy more miners. These ones are way better. Now it's at the point where like I can mine confidently with the miners I just bought, the S21 XPs, for the next 4 years. And I'm not worried about it. It's fine. But essentially, back to your point, it's like, what is Bitcoin mining? It validates the transactions on the blockchain, but why would I buy an expensive miner, pay all the electricity, build a warehouse to do this? Because I get paid for it. We get paid in Bitcoin for participating on validating the transactions on the blockchain. And what happens is every 10 minutes, a new block is mined. And every 10 minutes, the miners are rewarded for verifying the blocks in the blockchain. So one miner right now is rewarded 3.125 Bitcoin for verifying blocks on the blockchain. And essentially every 10 minutes, you're in a raffle with all the miners in the world. And when the raffle selects a miner, you're rewarded the 3.125.
And question for you, where does this Bitcoin that's being rewarded to the miners, like whose pocket is that coming out of?
So this is all—
Because they're all owned by someone, right?
No, so this is all in the code. This is actually new Bitcoin being circulated into the total circulation. The crazy part is there's already 97%.
I thought you said 21 million was the total supply.
Yeah, that will ever be mined. There's already like 19.8 million Bitcoin already out in circulation. As of from 2008 to right now, there's like 97%. There's only 3% left, but that last 3% will take until the year 2140, right? So it's—
Why so long?
Because it's a deflationary economic system that Satoshi Nakamoto created. So he knew that by dispersing it in tranches of every 4 years, cutting the new issuance of Bitcoin, it's called a halving event. Every 4 years is a halving event where the miners receive less and less Bitcoin, half as much as the prior epoch. And that's what causes a supply shock. So every 18 months following the halving event, we see a what? Bull market, right? Because the miners don't want to sell the Bitcoin anymore. It's like, if you're going to reward me half as much Bitcoin as I was just getting, why would I sell it? I want it to be worth more. So people hold on to it and you have this scarcity mechanism that kicks in and now you have a supply shock. So Bitcoin goes from, 21K in 2017 to 69K by 2021, and then 69K by 2021 to 126K in 2025, right? Every 4 years, it makes higher highs and lower lows. And this has continued to happen every 4 years since it was created, and it's never stopped. So as long as that keeps happening and we keep printing money with central banks around the world, all that value is trying to find its way into the scarcest asset of all time, which is Bitcoin, and then gold would probably fall right behind it.
Yeah. How did you get into Bitcoin mining?
Yeah, so I actually paid a $500,000 tax bill in 2021, and then I started mining Bitcoin because I was accumulating Bitcoin with all my ordinary income that I made. So in 2021, I had my first big year. I made $1.2 million. I invested—
Doing what?
Selling info online.
Okay.
Yeah. So
what kind of info?
I built a credit company called Credit Class, which leveraged credit, build income, and teaching people how to travel the world for free. And then I also was an affiliate marketer as well. So did really well that year. I put 90% of my income into Bitcoin, and the year ended. So I had no write-offs, no deductions, nothing. I met Carlton at a mastermind in early 2022. This was after I already got my tax bill. And I was like, man, I wish I met you like 3 months ago because I would have just done some of the strategies you just presented tonight. And he was like, well, dude, guess what? You can actually buy Bitcoin mining machines and they qualify for 100% bonus depreciation in year one. And I was like, wait, so instead of buying Bitcoin on Coinbase where I'm getting 0 write-offs, I'm literally taking ordinary income and I'm converting it into Bitcoin. That leaves me with my whole tax problem. I can actually just buy the machines and I'll get all the Bitcoin over the next 4 years and it'll mine for me, dollar cost average for me, and I get 100% write-off up front. And I was like, so since 2022, I have not bought Bitcoin anymore. I only buy miners. And so I started mining for myself, having a personal brand. As you know, you share things you're excited about. And everyone was like, bro, what is
How
this?
do I do this too?
What is this mining thing?
Yeah.
That's when leverage mining was born. We teach people how to leverage the IRS tax code through Bitcoin mining.
Okay, so elaborate on that. How can one, reduce their tax burden significantly, potentially get up to 100% bonus depreciation by getting into this?
Yeah, so it is 100%. It was 40% before the BBB, the Big Beautiful Bill. And now that's passed indefinitely. Thank you, Donald Trump. And so essentially the Bitcoin mining machines themselves are 100% write-off in year one. Whether it's a passive business, active business, does not matter. The machines count as 100%. Now, since you're setting up an LLC and you are actively participating in this business that you're setting up, you now qualify for business deductions. Electricity, maintenance, setup, racking fees, that all comes with the Bitcoin mining business. And now you're going to use those write-offs to offset the Bitcoin mining income and other income from your other LLCs and W-2 if you have one. So essentially, you can now accumulate the hardest money of all time and eliminate your tax bill.
That's huge, man. This is something that I didn't know about until now. And I don't think a lot of business owners know about this, because traditionally you think, okay, I want to get a tax write-off. You got to go buy real estate, get the short-term rental strategy, or go buy a private jet that weighs more than 6,000 pounds, certain SUVs, stuff like that. Now, this is unique because it's not just, bonus depreciation, but if you're bullish on Bitcoin, which a lot of people are, then there's going to be a huge, massive ROI by getting in this as well. Now, question for you: what is a typical machine cost?
Yeah, so typical machine, if you're ordering from China, you do have to order in bulk. Our minimum order is 100 at a time. So we'll spend $500,000 to $600,000 on our machines. If you want to buy
about 5 to 6K.
for me, if you want to buy machines right now and you want to just buy 1 or 2, you're going to be paying for those machines 7 to 9K. If you go on Amazon, you can purchase them there. You have to pay shipping. I've been shipped rocks before in a box on Amazon. It's a sketchy industry. There's a lot of bad actors in it. So that's why it's really essential to find someone like a Leverage Mining or any of our competitors. Other people do this in the space where they have good relationships with these manufacturers in China. They've done the work, they've built the relationships, and you can leverage them.
So let's just say someone wants to go buy one. They're going to drop 7 to 8K. How much in Bitcoin can they expect to receive in 1 year?
So you can't just buy the miner. There's 20 volt power installation that you now need to do wherever you're mining.
So and
your energy has to be extremely abundant and cheap and readily available 24/7. You cannot have, power outages.
So we can't just plug it into this.
It won't even plug in. You have to have a guy come out here and install 20 volt power. Plus the
How much does that run?
It's expensive and it's complicated. It's not an easy process. Like you or me could not do it by ourselves.
Sure.
You have to be an electrical engineer.
Yeah, so similar to if you went and bought an electric vehicle.
Yep.
And you wanted to have the most efficient chargers in your garage. It'd be similar to that, setting
exactly,
that up?
Exactly. And the average household electricity cost is 20 cents a kilowatt. You need 6 to 10 cents if you want to be profitable.
Okay. So solar and all that.
Solar's not the best. We use wind turbines in our West Texas facility and grid energy, extremely cheap grid energy.
Okay.
Yep.
How come no solar?
Solar is not as reliable, right? Because the sun is coming in, it's coming out, it's dark. It's not you need constant, abundant, and cheap electricity. And solar's not the best for mining. Yeah. Typically you'll see people use renewables, and wind turbines are really good for Bitcoin mining, but mostly grid energy. If you go out in Texas, and you can, get a deal with ERCOT. I mean, ERCOT now is the power provider there. It takes 3 years to set up. So even all these hyperscalers, Microsoft, NVIDIA, all them, they're going to the Bitcoin mining companies and they're paying them $8 to $10 billion for 5 to 10 year contracts to just use their power for AI. And so Bitcoin miners have the power because we've been doing this for 15 years. AI just started in 2022. It's a race to power. There's not enough to power. So a lot of the public mining companies like Riot Blockchain, Iron, Cypher, these are companies I'm invested in for the past couple of years and kind of got lucky because now they're making that transition to AI. So Bitcoin and AI together, I think, are the perfect match made for making a lot of money over the next like 10 years.
Okay.
Yeah.
And so what other operating costs do you have with picking one of these machines up?
Yeah. So, if you were to do it by yourself, you need to find a place where you can obviously plug it in and you have to have someone manage it, right? There's a really high learning curve with plugging it in and then managing it through a mining pool. Mining pool is essentially where you put all your compute power together with hundreds of other miners and you all share the block rewards. Because hitting a block reward with one miner is like hitting a lottery. It's not going to happen. So imagine you plug it in, you're paying 20 cents a kilowatt hour. Every day you're paying for electricity. There's no guarantee you hit a block reward and get the 3.125 Bitcoin. But if you buy a miner, you put it with a facility like us, we have cheap electricity. We have the maintenance guys there 24/7. We got security. Your miner's up and running. We're going to repair it if anything happens. And you're also sharing the rewards with a pool, and we're hitting multiple block rewards every single day. So we're all getting rewarded based on how much compute power we're contributing to that mining pool.
Got
So
it.
we're always winning.
That sounds like the way to go, and it's
It
hands
is.
off.
100%.
Otherwise, your costs are not just higher, but it's pulling your time. Return on time is a big
Oh
metric.
yeah, man. I mean, we want all of our investors to work 100 hours in the business and that's it, right? Because if you want to have active write-offs, you need 100% or 100 hours of material participation. And that's why this year we launched our app in Q4 that is a tracker. So we have a tracker that essentially we built it with accountants and tax strategists. Maybe you've done this for your real estate, right? Having an active real estate professional, you should have a logbook, right? Where you track all of your material participation. Oh, I met with a contractor. I dealt with the banks for this long.
Our investors are all passive. So
Okay.
their tax benefits
Yep.
can be used to offset other streams of passive income,
For sure.
not active.
Exactly. So with
But
us,
I feel you on that.
yeah. So with us, we're active, right?
Active, yeah.
We want our investors to be writing off against their active income. And that's how you do it, right? You have to prove that test, the active material participation test.
Dude, I love it, dude. So you mentioned AI is kind of changing the way things are done. Where do you kind of foresee the machine game and mining kind of going over the next few years?
I mean, it's already happening. It's a race to power right now. I think one of the best investments you can do is buying the picks and the axes and the shovels around the AI infrastructure, right? So NVIDIA is the #1 chip provider in the world. It's the largest $5 trillion company right now. So that ship is kind of sailed. Maybe it goes to 20, 30, 40 trillion. It could with infinite money printing and where AI is going, humanoid robots, robo-taxis, right? This is all happening. You need to invest in this infrastructure and in the space. How do you get available infrastructure investment? You invest in the data centers, right? And so there's companies like Iron, Cypher, Nibis. They're all getting deals with hyperscalers like Google, AWS, Microsoft, right? And they're just dishing out billions of dollars because they don't have the power contracts that these Bitcoin miners have. They can get it in 2028, 2029. That's when it becomes available. But right now, there's nothing available. So they're going to pay for every gigawatt and megawatt of available power that's already contracted and ready to power. They will all be purchased in the next year and a half. So that's why these stocks are going up 500 to 800% in a 2-month period right now.
Yeah.
Yeah.
So Bitcoin today about 103,000 at the date of this recording. Where do you foresee Bitcoin pricing kind of going over the next 5 years?
It's going up forever. I think it's going to millions of dollars. Yeah.
Will we see it 10x over the next 10 years? Or
100%.
Yeah.
Yeah, 10x in 10 years. Easily.
10x in 10 years.
I would say
so we're looking at 1 million.
100%. Yeah.
In 10 years.
I'll put my life on it. Yeah.
I know Grant Cardone is doing this.
I watched him get orange pilled in real time, bro. He was a real estate maxi, and literally he's now saying that, Grant, if you were given $1 billion, where would you put it, in Bitcoin or real estate? He said Bitcoin.
I know with last time I had him on the podcast, he was saying that this is earlier this year, I think around February, January. He said that he just rolled out a new fund under Cardone Capital, and they were gonna, use it to buy these multifamily assets, and so the equity, the investor equity, would be, secured by the real estate investment, So if Bitcoin something ever happened to it, it's like, well, the principal is still kind of safe behind the real estate asset, but the cash flow that was spit off, instead of the cash flow distributions going to investors, the cash flow would be used to buy Bitcoin, and then over an 8 to 10 year time horizon, that would really juice the returns if what you're saying holds true. But in the worst case scenario, if Bitcoin went to zero, their money would still be protected by the asset. So I thought it was kind of a cool hybrid.
I think it's a
You know what I'm saying?
genius,
Because
genius
it kind of
idea.
takes that downside risk off the table.
I think it's incredible, dude.
Yeah,
It's
but
that-
it juices the upside.
It's the barbell strategy, right? Like Ray Dalio, for example, a year ago was saying, have 5% of your portfolio in Bitcoin. This year he changed it to 15%, right? This is coming
Who said
from
that?
Ray Dalio, one of
Okay.
the biggest billionaires in the world. He owns one of the most
He has
successful.
he has a good book too.
Yeah, he owns one of the most successful hedge funds of all time. He was against Bitcoin for the past 10 years. And now he's coming out saying, oh, move from 5% to 15%, because what happens is now bonds are the worst performing asset, right? So typical portfolio is a 60-40 portfolio split between 40% bonds, 60% stocks. Now they're saying, let's adjust all that and let's, account for 15% of Bitcoin. And that little 15% can be all the difference you need to outperform the markets.
Yeah, that's good stuff, man. So, interested to see like where Cardone Capital goes with that whole thing. I personally don't know a whole lot about Bitcoin, so it's kind of been educational for me learning about it, kind of with the audience. Tell me what's going on with the altcoin market, because I know altcoins were a big thing not too long ago. NFTs as well. What's going on with those?
Well, I think what happened this year that let everyone down is there wasn't liquidity like there was in 2021, right? We saw, like you said, in the past 5 years, 80% of the money was printed, right? And that happened all because of COVID and the shutdowns. They printed money. They were handing out $2,000 stimulus checks that went directly into the stock market and altcoins. We haven't had liquidity. We've had actually quantitative tightening. So the Fed has actually been tightening the monetary supply, sucking money out of the system instead of injecting it in. And that is why, Bitcoin's only at 100K instead of maybe 250, because the Fed had interest rates super high and they were not printing money actively. So this cycle was very different compared to the COVID cycle, where everyone was stuck at home. There was no real value creation. Companies were shut down. And there was no real development being done in the world. So people were like just speculating on pixie dust and fairy coins and NFTs, right? Because that's all there was to do. There was no real value being made. Now you have AI born in 2022 with ChatGPT officially launched to the public. And at the same time, we start a new business cycle. There's less liquidity and there's real new value being created. You can argue that it's the next industrial revolution, right? It's the AI revolution happening right now. So value investors are like, well, I'm not going to invest in this fairy dust coin when we have ChatGPT, humanoid robots, and robo-taxis literally playing out in real time. And that's why there was no alt season.
Yeah, it's interesting. Now, what about the NFT thing? Because I remember a few years ago, a lot of people were hyping up the NFTs.
Yeah, right.
But then all those guys are quiet now.
It was a cool idea, like non-fungible tokens. I get it.
What was the idea behind it?
It was basically like, you could have, for example, if you wanted to buy a movie ticket or a concert ticket, right? We deal with these intermediaries like Ticketmaster, for example. So I have to pay Ticketmaster. They have to validate it. They're the controller, right? Things could happen with the money. I have to dispute against them. Whereas I could just own the ticket, the movie ticket or the concert ticket as an NFT. I can transfer it on the blockchain to anyone I want without a third party reaching their hand in, taking fees, whatever. So you could do that with art as well, right? Art pieces. There's an art gallery we got to go through. There's commission. There's all these different things that kind of make the transaction very hard to do. Same with homes, right? Imagine like if I just own an NFT attached to my house, I could just send you the NFT and then you own the home and it's verified on the blockchain. So that was kind of the idea. And I think there's still a possibility that kind of plays out. I know on the real estate example, Open Door is trying to do that. The way we've been buying real estate for the past 50 years is so archaic, right? There's so much freaking paperwork, so many parties, so many commissions we got to pay out. It's like Open Door is like, what if you just picked your home, sent the money, and you own the home?
Yeah.
And that was it. And so that's what I think is next, like, especially with AI, they're going to make it really easy to do all these things that have been super hard to do. Yeah.
And so what happened with the NFT game to where it kind of stalled out? Like, did something happen technologically?
Man, I think it was just, people were paying $30 million for a picture of a rock. Like it's just,
Yeah.
it's kind of just
It was nothing
crazy.
tangible.
There was nothing tangible. It was just all pixie dust and fairy dust. And, the music kind of stopped and then everyone grabbed a chair and who wasn't sitting down got completely wrecked. And so the overvaluations were just so crazy. Justin Bieber was buying Bored Apes for $2 million, right? And this was after Bitcoin already peaked. So money flows out of Bitcoin. Bitcoin topped at 69K and all the money just kept going and trying to find new musical chairs to play. And NFTs was kind of that last Ponzi scheme. And so, yeah, I never got into it, but it was definitely crazy. I mean, and then you had FTX collapse, BlockFi, Celsius, all these exchanges went down. There's a lot of mayhem last cycle, and I think that's because of how much money was printed.
Yeah.
Yeah.
So, because a lot of people talk about Bitcoin and Ethereum and some of these coins that are doing good, but no one really talks about kind of the dark side of all the cryptocurrency stuff. And so you're saying NFTs was part of it, the altcoins was another part of it. Like where else did people kind of lose their shirts?
Yeah, I
in
mean,
the
look,
crypto
man,
game?
I even traded this cycle. I was Bitcoin only for like 5 years, and I took my eye off the ball for a little bit, and I started trading the memes and stuff. And bro, it's like as a trader in the
Like
markets,
Doge?
in the stuff, no, like worse stuff, like on chain Solana tokens. They created this thing called Pump.fun where you could create a meme coin in literally 1 second. You just type in the name. You say, a little thing about it. You put a picture, you press done, and it's created. And you could go buy it, right? So that happened, and that sucked out all the liquidity. The creators of Pump Fund extracted like $250 million out of the markets to themselves.
Because people all went to go start their own.
Yeah, they all wanted to start their own. Everyone started speculating on these little coins, and it became a massive frenzy. And I think all the money kind of got sucked out into these new coins. Last cycle, there was only a few thousand altcoins. This cycle, there was millions of coins, right? So there's too much dispersion of capital. And the creator that created all the tokens, right? Pump Fund, they're the fee generator, and you're paying them as a platform to make the tokens on there. They took all the money and they never put it back in the system, right? So everyone kind of got with altcoins. And I won't lie, as I said, I lost money in altcoins. Stupid. It's like we all want, short, quick results. When it's like Bitcoin is literally, I can't say guaranteed because nothing's guaranteed in life, but Bitcoin has proven itself for 15 years. These altcoins, they're created and then they're gone within 30 days. So
Yeah.
why chance it,
Yeah. And that's why I've always kind of been into the real estate game or love real estate, because it's like it's something tangible, right? It's like they're not building more of it. You can go walk these properties, real people live there or stay there. Like this space that we're in right now, recording this building. I mean, you can see the brick behind you and like the archways. This is a 130-year-old building.
Wow.
And it's built for manufacturing goods and products, but today, 130 years later, it's still bringing in income as an office space, right? And so that's why I love the real estate game. Now, if I was going to get into crypto, I think Bitcoin would be the only one that I would really go ham on.
That's it, man.
And that seems like the one that's the one that's capped on supply and the one that really has a clear path to growing. But it's an interesting thing. Now, I don't understand it, so I wouldn't get into it personally. But if you're going to do it, I think going through your company, if you're a business owner right now, you got a bunch of taxes that you're paying. I think going through your company, letting you guys manage it, I think that would be the way to do it.
For sure, man. I appreciate that. And that's what we do. I mean, we're partnered with 10 official tax partners and tax strategists in the US.
Carlton Dennis is one of them.
Carlton Dennis,
shout out to Carlton,
our biggest partner. Shout out to Carlton.
Yeah.
I mean, if it wasn't for him, this business wouldn't be here today.
Yeah.
We've had the pleasure of helping about 50 of his clients over the past 4 years. It's been incredible.
Love Carlton. He's an investor with us here at Summers Capital, but more importantly, dude, good friend of mine and just a freaking good dude. And the wealth of knowledge he has on the tax game, absolutely insane.
Incredible, man.
Yeah.
So he's been a huge help. And one of the things we pride ourselves on is, the full life cycle of like becoming a Bitcoiner, right? So you come in, we set your miner up, then we educate you on self-custody, right? You get to custody your own keys to your own coins. No one can ever take that from you. So I hired and recruited people from Bitmain, the largest Bitcoin mining company, and they now work at my company, and they teach you how to set up a wallet, how to go through security, how to custody your own wealth so no one can ever take it from you. So that's one thing we value a lot. And then also becoming your own bank with Bitcoin. And this is the exciting part. Being in Bitcoin for 5 years, you know, at this point, you can now leverage against your Bitcoin. You can take out loans against your Bitcoin. JP Morgan just came out with a statement that you are now going to be allowed to take out loans against your Bitcoin with them as the custodian. So you can,
Really?
you can give them your Bitcoin and you
Mhm.
can take out a loan against your Bitcoin, a mortgage, right? And you can mortgage your house without selling your Bitcoin. And it's the most pristine collateral of all time, right? It's 50% a year. So, you know, it's over collateralized. And that's where I think the credit markets are going. I think it's going to get out of this whole Fugazi, you know, fake money system we're in. And people are really starting to understand, you know, gold standard, Bitcoin standard. They want real pristine collateral. And that's what Bitcoin can offer. And so you have companies like, I don't know if you heard of MicroStrategy,
No.
like Michael Saylor.
No.
So MicroStrategy, what they've done is they've created something called a Bitcoin-backed bond, right? What are government bonds backed by? Nothing,
Yeah.
right? And they're the worst performing things ever right now. So
It's an IOU.
people are starting to lose trust in the government and bonds altogether. So what Michael Saylor did is he created a preferred stock within his company where you can buy this preferred stock. He pegs it at $100 and he pays you 10% yield on it, paid out monthly. Okay, so imagine, would you rather have your money sitting in a JP Morgan account? I earn 0.1% on my money. I think to have a Charles Schwab that gives you 5%, or would you rather have it backed 5 times over collateralized by Bitcoin, earning you 10% paid out monthly, right? That $1 million in there in 1 year, you earn $100,000, right? And Bitcoin, as long as it doesn't go to zero and it keeps you doing, you know, at least 30, 40, 50% annualized, it's a much better product. So if MicroStrategy successfully does this, this will eat the trillions of dollar bond market. And all of that money will flow from that market into MicroStrategy. And essentially he'll become the Amazon of bonds.
Out of curiosity, so when you borrow against your Bitcoin, you mentioned Chase will be a custodian. Are they doing that right now, or this is a
They
hypothetical
just
thing?
released an article about it. They're working with legislation to get that done.
Got it.
I think that comes out in the next 12 to 18
Are there
months.
other custodians that allow you to do it now?
Yes,
And
yes.
how much? What kind of like LTV can you get against your
50%
Bitcoin?
LTV, 9% interest.
And the interest goes to you or it goes to the custodian?
Goes to them.
Okay.
Yeah.
Got it.
And they're balloon payments. So it's like one payment after 1 year. They usually only do like 1 year loans right now. So they're very restrictive, right?
So it's interest only for a year and then
you pay all of it back.
Got it.
So it's not the best, but you know, I've done it. I bought luxury watches with it. I bought a Patek Philippe in 2021 for 120K. My rule was I always wanted that watch. It was my dream watch. But I was like, instead of just paying cash for this watch, I'm going to buy Bitcoin and then I'm going to loan against my Bitcoin. At the time, you could get a 3% loan with Celsius. They blew up. So don't do that. And I basically got the 120K. I bought the watch. I wore it for 3 months. I sold it for 165.
Nice.
Yeah. And then I paid back the loan. So I made 45K wearing my dream watch for 3 months.
Yeah.
So
did you think that you would sell it that quick?
No, but the way it went up that fast, I knew it was a bubble.
Yeah.
And I had to capitalize on it. I mean,
And
45K for doing nothing. Come on.
Yeah. So Celsius blew up. What happened to the people that had loans with them?
Bro, it was such a disaster. I tried to warn everyone. I made a YouTube video about it 2 weeks before they blew up. Funny enough, I got my money off the platform, about 300K. And 2 years later, they sent me a notice from an attorney, and they said that we want our money back because I became a creditor to them. And they had a clawback agreement. Like when you sign up with them, you like have to submit to their terms and service. And if you pulled your money off 90 days before they went insolvent, technically they own your money.
Damn.
And so they said
That's
they want,
crazy.
and they tried to price it where Bitcoin was at the time, which was like 60K or whatever. And then Bitcoin at that time was like 18K. And so they tried to completely screw you. Maybe it was a little more, maybe it was like 30K. And they essentially said, hey, look, if you just send us 15 grand right now, this is like your final settlement offer, or we're coming after you for $600,000. I just paid them 15K.
Damn,
So
that's crazy.
total
bro.
scam, man. But that's the price you got to pay. So I still made money though, 15K, you know, out of the 45.
And people were trading all sorts of coins with them.
Yeah. So they had
Ethereum,
they
Solana.
had like an interest program where you could, you know, buy their token, sell token, and you could stake it and they pay you interest. It was just a massive Ponzi scheme. BlockFi went down as well. They were promoted heavily by institutions. They were on TV and all the airports. Bro, every normal day, people were using these platforms and they just got too greedy. There was an arbitrage that was going on and the arb failed and it stopped working. So they weren't able to pay the interest anymore that they were promising. And so the whole thing unraveled, and they
Yeah,
all
I
went
would say
bankrupt.
like for anyone listening to this, if you're getting into investing in anything, it's like a general rule of thumb is that if you can't explain how the investment works, then you probably shouldn't invest into it. And I think a lot of that was going on back then in 21, 22. Government was printing a lot of money. People are sitting at home and they're just investing in that new, get rich quick scheme. That was, a lot of marketing dollars was going behind, a lot of social media, a lot of YouTube channels were coming up at the time and popping up. But it's like a lot of people that were investing probably didn't know how to explain it, how it worked.
Yep.
And that's a red flag.
Yep.
Yeah.
100%, man.
Yeah.
Could have just bought Bitcoin and chilled.
Yeah, I hear you. Dude, Colin, I appreciate you coming on the show, man. Where can the folks get in touch with you? But more importantly, where can they get in touch if they want to use your service? And we're going to do a little special podcast listener promo.
Yeah, let's
drop
do
it
it.
for them.
Yeah, for sure. So if you want to sign up for mining or just get on a call with someone from my team to learn more, it's leveragemining.com. Make sure in the box where it says, where did you come from? Put Rich Summers. And we got a nice discount for you guys. I'm on all social media platforms at Colin Yurcisin. You can find me there. Shoot me a message.
There it is. Go check him out on Instagram at Colin Yurcisin. He's Colin Yurcisin. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you guys on the next one.
Let's go.
Peace.